Today I'd like to share a really profitable strategy. You don't have to have any daily bias. If you just trade this strategy, then you can become profitable. It has a win rate around 70%. Last week it was 80% on GBP USD. The week before that, even 100%. But for full transparency, I also backtested the whole month of June on Euro USD, and there it was around 50%. So, of course, with every strategy, it's not 100% profitability, but if you trade it mechanically and trade it following rules, then you can become profitable with only this strategy. And even if you want, pass funded accounts and challenges with this and get a funded account. If you'd like to trade on a funded account, I really recommend to get your account at Funded Trading Plus. I'm also funded with them, and that's because of three main reasons. One is you don't have any time restrictions on your evaluation, so you can take longer than 30 days to pass. So you don't get to overtrade and FOMO trade and take more risk than that's necessary. So that's one of the reasons. Second reason is you can scale a lot quicker, because they offer to double your account every time you reach a certain profit target. So you can scale a lot quicker than other prop firms onto an amount of 1 to 2 million. And the third reason for me is the weekly payout option. Even the first payout you can get immediately once you're funded. After that, you can get your payouts every week. So that gives a lot more flexibility, and you can just make your trading plan every week again and just take out your profits at the end of the week, have some weekend, and then do it all over again. So check out the code below. With the code, you get a 10% discount on a challenge account at Funded Trading Plus. So let's dive into it. What is it? I call it the LBS strategy. So it's the London bias strategy. You don't need a daily bias, but some factors in the chart and some time-based factors give you the right bias just for London to take out a trade of 1 to 2.5 RR. So that's what we're going to do. And of course, I'm going to show you some examples. But first, I will lay it out for you how the strategy exactly is built, which rules you have to pay attention to. Otherwise, it's a no trade. So first, you want to mark out the range. Let me write it down. You want to mark out the range between 3 and 3:55 a.m. New York time. It's really important that your chart is set it at New York time. That's UTC -4 in my chart here, because then you're in sync with New York market and stuff like that. And I'm an ICT trader, so he also trades in New York time. A lot of my stuff is based on ICT, and this is one of the strategies I found out that is really profitable, and I haven't seen anyone talk about it yet. So let me explain. You mark out the range between 3 and 3:55 a.m. What you do next is you mark out the highs and the lows, or at least the high and low of that range. So one high and one low. Third rule is you wait for a 5-minute candle close above or below that range. Above means we go look for longs. Below means we're going to look for shorts. Then we go to the 50-minute chart. And we'll look for the premium discount arrays that are likely to give us some kind of reaction. So that's the fourth rule on this strategy. The fifth rule is we go to the 5-minute and also look for some PD arrays. Maybe they overlap, maybe the 15-minute hasn't got any, maybe the 15-minute does have a PD array, but it's kind of big and we want to fine tune it on a 5-minute. So we go to the 5-minute. For me, at least, also when I backtested and also when I traded, order blocks are my number one entry. Unless there's some kind of big fair value gap on the 5 minutes, then I'd like to enter on the 25% of that. I will explain this in a minute because I have the different kind of entries laid out for you. And the final rule is I only want to enter between 4 and 8 a.m. on a New York chart. So let's dive into this and see how this plays out. So first of all, I'd like to explain to you what exactly is mark out the range between 3 and 3:55. So let's do that. So this morning, I'm on the 5-minute chart. I'm gonna place a vertical. Where are we? On the 3 a.m. That's around here. And I'm gonna place a vertical line on the 3:55 a.m. That's this candle. So as you can see, between the lines, we have a range. So we go to step 2, and that is, let me see where I have the explanation. So let me go to the other. We mark out the high and low of the range. So we have a high within the range. That's this one. Let me make sure that my chart is above my drawings. All right. And we have a low in that range. Now let me put on the replay. So when you go to your chart at the 4 a.m. and you mark out the range between the 3 and the 3:55, we now go to the next step, and that is we will wait for a 5-minute candle close above or below the range. Above means long, below means short. So we want to wait and see which bias for the London session London will give us. So that means we have to wait for a 5-minute candle close. So not a wick, a candle close. So if I fast forward this is the candle close. So what do we do after that happens? We go to the 15-minute chart and look for the premium discount arrays in that area, in that range. We want to look for areas to go short between the lines, so in that range. So we go to the 15-minute chart. What do we see? We see a 15-minute order block and also 15-minute order block, but a big fair value gap. So this is an imbalance that I think is likely they want to fill. Also this on low time frame, I guess this is like a breaker, but that doesn't matter right now. So if we look at order blocks or fair value gaps, what am I looking at then? An order block is looking like this, where we have like the up candle and then a down candle that closes below the wick of that one. This most of the time is a really strong order block. So if it closes in this wick or something like that, it's weak. So if you want to look for an order block, look for a strong order block. And then the entry will be here on the wick of this bullish candle. So this is a bearish order block. So right now we're looking for bearish price action because also on GBP, the 5-minute candle closed below the range. What is a fair value gap? A fair value gap only can form with three candles that leave a gap between the first and the third candle wicks. So we have the first candle, the wick ends here. We have a second candle that trades through it, and then the third candle comes up, but doesn't come up all the way to this wick to close that imbalance. So this creates an imbalance, and that's called a fair value gap, because price always wants to trade to a fair value. If we look at big fair value gaps, so if you have this one, you would like to enter on the bottom of the gap. So this is also the bearish entry. Your entry would be here, your stop would be above. Stop always above the first candle of the fair value gap. Here the stop always goes above the order block. When you have a very big fair value gap, as you can see, this is also an order block that really traded lower. So it looks like this example where you can enter on the order block, but because the imbalance is so big, I'd like to enter, and most of the times you see this then on the 5 minute, I'd like to enter on the 25% of the big fair value gap. So you can put your Fibonacci, this one, and I've only marked out the 0 to 1, and then 25%, 50%, and 75%. And I place that on the gap. So I measure the gap and take the 25% of the gap as an entry. So these are the entry points you can look for trading this strategy. So if we go back to the chart, what do we see? We see that 15-minute order block formed here. So that's the first example I gave. This is an order block. And here is the 15-minute fair value gap. So we marked out our PD arrays on the 15 minute. So we go to the 15 minute and look for premium discount arrays. That's what we did. Now we go to the 5 minute and see what we will get there on the PD arrays and stuff like that. So if I look at the 5 minute, it's kind of the same. This is also the order block area. This is a big gap. So when there is a big imbalance, price almost always comes back for it. So I love to trade the order blocks as entries, but if there's a big imbalance like that, I go for the imbalance. And in this case, it's already traded through like half. So I don't measure like the 25% of this because it's already traded through. This is the whole gap all the way to here. So 25% is already tapped. But I would love if they tap a little bit deeper into it then. So for me, my entry would have been here and my stop would have been here. Why? Because this is the first candle of the gap. So this was the complete gap on the 5 minute from there to there. It's already traded to here. So it's left this part of the gap. So I place my stop above the first candle that created this gap. And I aim for a 2.5 RR. So I don't aim for very high, very lots of profits and stuff like that. Just aim for this and you will see that most of the times this will get hit. So you get a better profit in the end of the day than if you only would take partials. So if, let me see, I marked this out. Let me see if I miss any steps. Yeah, my OBs are number 1 entries unless there's a big gap. That's what we saw. We did not enter on the 25% because it's already failed. We enter a little bit higher. Then we enter between 4 and 8 a.m. New York. After that, remove limit. So you don't want to trade after that time. Even 7:30, 8 a.m. and not much. No, that's that's just where the better entries are, and everything after that makes a trade invalid, and the London session is over. So you're done trading. So let me see if we get only the tap on the order block or that they want to fill the fair value gap. Let me see what time it is. We don't want to trade past. Let me place a vertical, not a horizontal, a vertical. So that's the 8 a.m. So let me see if we can get an entry somewhere before that white line. Yeah, and we're in. So 7:40, we're in the trade. And let's see what happens. Get a strong reaction. And we're out. So this morning, this would have been a perfect trade of 2.5 R. There are a few things you should pay attention to, and let me write them down, because otherwise you might take more losses than necessary. First off, you can get more confluence on your trade if you watch the dollar. So check the dollar to see if it's showing exactly the opposite 5-minute candle close and or the other pair. So if you're trading GBP, I get the best results on that pair. So if you're trading GBP, you can also check if the euro dollar pair closed the 5-minute candle below the range, and if the dollar closed the 5-minute candle above its range. So that can give you some extra confluence, and you can just follow a rule for yourself that you only take your trade with that confluence. So that's the first thing I'd like to add. Second thing is this one. If the 5-minute candle has big wicks and not a good body close, it's less probable. What do I mean by that? That means, let me check. If this is your range and the candles are closing below, and this is your 5 minutes, you get a bearish candle. However, the wick is like something like that. And also the candle after that and the candle after that, and they're barely closing below this. Just wait. This is just a less probable trade then. You can also check for confluences, because maybe the dollar didn't even close above its range. Maybe the other pair didn't even close below. So take that take that in account, that it's less probable trade to when you have like maybe 1 or 2 or 3 big wicks below and the candle just keeps closing, just not yet a really good displacement candle. So take that in account in your trades. And the third one, I think it's even more important, because we are human and we trade with emotion. So the best thing you can do is, once you have set up your limits, you set out your trade, don't manage it. Don't manage it if you see price moving the wrong way. Just close the chart and let it do its thing, because it can retrace all the time. And if you move your stop before it gets the chance to really run, then you might just or add a loss to your account, or you don't get the profits you wanted. So those are the things that are really important. So this is your checklist. If the trade doesn't match this checklist, you don't enter. It's as simple as that. So let me get you a few more examples. So I will remove this and let me see where we are. We will just rewind to Friday. This was Friday. Oh, let me go a bit. So I really invite you to backtest this strategy first so you can recognize what happens in the chart. So first we're going to mark out our 3 a.m. to 3:55 a.m. So that's exactly this candle and then this candle. So that's the range. We mark out the high of the range and the low of the range. Let me just lock those so I can't remove them or replace them. All right, so first step is wait for the 5-minute candle close. That was a wick, no close yet. This is our close. Okay, so next step is go to the 15-minute and look for some premium discount arrays inside the range. So between the lines, you will look for some premium discount arrays. So in this case, I see a fair value gap that's relatively small. I don't see any 15-minute order blocks. I prefer those actually. I prefer the order blocks more than the fair value gaps with this strategy, unless the fair value gap created a really big imbalance. So I mark them out, but they're not my favorite entries in this particular strategy. So let me go to the 5-minute and see what we have. Now here you have a perfect example of an order block with the bullish candle, the last bullish candle, and then a really big bearish candle that closed below that wick. So the order blocks are my preferred entries. And I always enter on the wick, so the low of the order block. But because we also have this little fair value gap, I will place my stop a little bit higher, just in case. So I enter here, and I place a stop not just above the order block, but a little bit more to make sure they don't want to take out these equal highs and tap into the gap. It's possible. So 2.5. So we have the range, it broke out below, so our London bias for this trade is bearish right now. It doesn't mean the daily is bearish or stuff like that, but it doesn't matter. We trade in such a short time frame that it doesn't matter. You just want to take profits. So let me see if we can get our entry. There's some big displacements. Maybe they want to fill that. Yeah, we get tagged in here. So awesome. Let me see what they want to do next. Do we get our profit or do they want to fill out the... yeah. So we got out at 2.5 R. So this was an awesome trade. Let me do one other day. The day before that, I don't want to see the price action, so I really cannot be biased. Is this Thursday? Yeah, Thursday, 4 a.m. We replay. And I really recommend you doing this. Just backtesting the strategy. Don't just believe my blue eyes on this strategy, but make it your own. Make it your own edge if you'd like to at least trade this strategy. So I mark out the 3 a.m., the 3:55. I take the high. I take the low. All right, so next, we wait for a candle close above or below. There's our candle. Oh, no, it didn't close. This one also didn't. This one also didn't. There you go. 15 minutes. Great order block here on the 15 minutes. That's my preferred entry already. Let me see what we have on a 5. Also, this range between here and there, you want just to look for imbalances or the order blocks. This is a small gap, but not big enough for them to really want to fill that. So, and this gap is already filled for more than 50%. So I don't think it's likely they will trade all the way back up there. So I prefer this 15-minute order block over a lot of other things, especially because it's a higher time frame. So we enter on the wick of the block. Stop just a little bit above. 2.5. Let's see if we can get an entry. Yeah, whoa. Okay, we got tagged into the pip. But do we get the profits? Yeah. So there you have it. It's a really good strategy, but you have to follow the rules. So if it's not following all the rules I gave you, it's a no trade. So make sure the entry is before the 8 a.m. So that was the case. It's 7 a.m. Make sure you maybe even find some confluence. We didn't even do that with the dollar or euro USD. You can get some extra confluence. But as you can see, the trade strategy just already worked on 2 days in last week. So backtest it for yourself. Let me know what you think of this strategy. And I would love if you would subscribe to the channel because I'm going to post a lot more videos about this. Thank you for watching, and until the next video. Before you go, I'd like to ask you something, because I'm considering to make a Discord community for people like me who love to trade but also want to learn. And if you're interested in learning from my trades, my setups, my weekly updates on the charts and stuff like that, and maybe even some live streams, I'm considering making that Discord community. But of course, only when people are interested. So if you're interested, would be interested in that, leave a comment below with Discord or community or I'm interested. Also, don't forget to subscribe to this channel, because I will post a lot more videos about the trade setups I use to make profits. One thing I'd like to mention is it won't be a free community, and that's for the simple reason that if you pay attention. I'm not interested in thrill-seeking people that only are looking for calls and stuff like that. So if you are serious in wanting to be a better trader, and you're serious in wanting to be a more sovereign trader, so you're not dependent on other people's opinions, other people's views at the charts, and you want to create your own strategies to become profitable, then this is the community where you'd like to be. Or at least that's the community that I'd like to hang out. So if you're interested, leave a comment below and I will consider opening it up and make it all the technical stuff ready to go and trade with you. All right, let me know. Bye.